right, let's get to some earnings here because Snowflake reporting first quarter earnings results, and those are just crossing the wires. Let's get you those numbers. Snowflake reports Q1 adjusted diluted EPS 24 cents. Street was at 21 cents, so that is a beat. Revenue 1.04 billion. Street was at 1.01 billion, so that is a beat as well. Let's turn ahead in terms of what they see for the second quarter. It looks like they are looking for product revenue 1.04 billion to and the Street was at 1.03 billion. They still see, and I think this is why you're seeing the stock doing what's doing here in the after hours. They see full year product revenue. They're calling for 4.33 billion. They had seen 4.28 billion, and the Street was at 4.29 billion, and we have the stock up nearly 7% in the after hours.
Yeah, and just to put some more details on that, revenue was a 26% gain in revenue year over year. The company is giving a little bit of detail as to what their customers are like in terms of size. They say they have 606 customers with trailing 12-month product revenue of more than $1 million. They have 754 Forbes Global 2000 customers. So in other words, a pretty high number of large companies that are their customers here. So they're sort of emphasizing that. They have 11,000 customers overall, according to Sridhar Ramaswamy, who is the CEO of the company. And so, sort of relying on those large enterprises for the growth that the company is seeing.
Yeah, lots of questions for this one. Not just about the print, but obviously broader questions are going to come up in the call. How do executives think about the macro, about any potential downstream tariff impact, the competitive landscape? How could that be evolving and Snowflake's place in it? For
more on Snowflake and the software sector more broadly, let's get to Pat Walravens, Head of Technology Equity Research at Citizens. Pat, thank you so much for joining us. First of all, just sort of give us your high-level reaction to these Snowflake numbers that at first blush seem pretty strong.
It looks great, right? So good for Snowflake. The last quarter they grew 28%, and this quarter I think it worked out to 26. So people were expecting it to go down to 22. They're growing faster than people had expected, and it suggests that for this company at least, the macro hasn't impacted them too badly, and we can certainly talk about why.
So fill that in for us, Patrick. How come?
Yeah. So I think, look, every company right now is talking about agents, right? And the key insight that we learned this quarter as we were doing all of our work talking to industry experts is that if you want an agent to do its job, it needs data. And that data in a lot of companies resides inside of Snowflake. So as companies all over the economy are trying to figure out how do we have these AI agents do, how do I get a late checkout at Marriott? Would be one example. Why can't that be done by an agent? Well, that agent then has to go into some data source and find out, what is Mr. Walravens' status? Who is coming to this room next, right? What time is the next person coming to the room? So that all the focus on AI and agents is driving the need for the data that Snowflake provides.
And from personal experience, you still need a human to do most of that stuff. The AI or just the automated agents is not quite yet up to the task, at least not in my experience. But so how is Snowflake then stacking up to competitors who are attempting to do the same thing? So who should we think of as sort of leading in this area besides a Snowflake?
The two dominant companies in this space are Snowflake and a San Francisco company that your viewers, I'm sure, are quite familiar with, that's private, called Databricks, right? And Databricks is about $3 billion in revenue. They disclosed that in the October quarter, they grew 60%, and they were last valued at like $62 billion. Snowflake, by comparison, is $4.5 billion in revenue, just grew in the high 20s and is valued a little higher than that. But these two are neck and neck. Snowflake is a little better on the data warehouse side and having a really easy to use solution. And Databricks is a little better on the AI and data science side. And so those are the two big players in the space. They're both having user conferences in San Francisco in June, one right after the other one.
Patrick, kind of a broader question I had for you about a lot of the names that you cover. When you look at the software earnings, Patrick, that we've gotten, I think you would say, generally solid, generally better than feared. I know a question on the street though, Patrick, is whether we're kind of kicking the can down the road. And there is going to be macro weakness, and it is going to hit these names in the quarters ahead. And I'm just curious how you're trying to think through that.
Yeah, so far so good. So of the 25 or so software companies that we already had report, I think, 13 of them I think are trading up from where they reported and 12 down in our universe. So that's definitely better than was feared. The wrinkle on all this is that most of the companies that have reported so far have been March quarter ends, and Liberation Day was early April. So investors have been really waiting, sort of bated breath here to figure out what would a April quarter end company look like. And, we just got that from Snowflake and it looks pretty good. So fingers crossed that people are still investing in software because, of this huge focus on AI, right? And that it's helping offset those macro headwinds. The big one that's coming up, of course, is next week we'll see Salesforce and we'll see how they did.
And I want to get to that, Patrick, but one kind of just broader question. Do you think in Q1, when you looked over the names that you cover in this software space, Patrick, do you think a lot of these names, were they benefiting from pull forward?
So I think that is true when you have companies that have some sort of a hardware component or have something that they need to import and they wanted to get ahead of the tariffs. I really don't think it's as true for software, right? Because, it's sort of a bizarre thing, but software is not subject to tariffs. So I don't think that was the driver. I understand that's part of the investor thinking out there.
Pat, I do want to turn to Salesforce because we're going to hear from them next week. And I'm curious how you see them sort of stacking up in this environment that you've been talking about.
Yeah. So big picture, first of all, Snowflake just grew right in the high 20s. Salesforce is kind of moving along at like 9% growth. So that is, way below what historically we've thought of this business is doing. And they have a really tricky transition in front of them right now, which is they are trying to shift from selling seats of, Salesforce automation software or call center software to selling a product they call Agentforce, which is exactly what it sounds like. It's selling AI agents. And those are priced on consumption, and in fact, Salesforce just changed the pricing last week. So there's Salesforce is heading in the right direction. They're trying to work through a big transition, and we'll see how that all plays out when they report.
And Pat, it's just interesting. You look at Salesforce, look at Benioff's company, the stock. We're down about 20% this year. We're basically flat over the past 12 months. Are there catalysts that we could look to, Pat, that may get this stock working again?
Yeah, and so the big catalyst will be the customers who buy Agentforce actually starting to deploy it at scale. So far, they've gotten like 5,000 customers to start using it. The issue is that, as Julie was talking about just a minute ago, it's tricky to get these things to work in a way that make your customers happy. So companies are rolling them out slowly and making sure that they really get the results they want. And since they're consumption based, if you roll it out slowly, that means the revenue that comes from it is slow. And so I think that's been slower than Mark Benioff had hoped. But look, he's been running this business now for 25 years. He has a real gift for finding, the next place to move the company to and where the demand is. And what I hear is that he's very engaged right now. So I think they're headed the right direction. I think they'll make it work. It is a little tricky at the moment. It's a little choppy at the moment.
Yeah, Pat, and I want to zero in on the timing issue of this, right? That it's hard to figure out where we are in this sort of agentic AI adoption cycle. And it keeps sort of changing, to your point, as companies are trying to figure out how to deploy. So where are we right now? What do we know about where we are in that adoption cycle?
It's so hard, right? And I've been doing this a long time. I've never seen things change this quickly. The best analogy that I could come up with is I went back and I said, if you look at the top 20 software companies in 1999, right? So before companies moved to the cloud. So on-premise versus the cloud, what percentage of those companies that still exist today in a meaningful way? So the number one company in 1999 was Microsoft, still the number one company today. But 60% of those companies are gone. Does anyone remember a company called BEA Systems? Does anyone remember a company called Sun Microsystems, right? Those were top 10 software companies. So there's a lot of change. Big companies got to adapt and get through it. Your big players, Microsoft, ServiceNow, Salesforce, they're all trying to figure out how do we make sure that we're the ones who make it through this transition and come out on the other end.
I'm old enough to remember those names, but I certainly haven't thought about them in a long time, Pat.
I know.
Thanks for that trip down memory lane, and thanks so much for joining us today. I appreciate it.
That's my pleasure. Thanks for having me.